Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial world. And tonight we're diving into GivBux Inc.'s latest SEC filing to see if this fintech company is building a super app or just a super mess. You're about to find out if this company is on solid ground or if it's running on fumes like so many others in this space. Before we begin, if you appreciate getting the real story behind these filings, make sure you're subscribed and hit that notification bell. We also have a thriving community over on our Discord channel, linked in the description below, where we break down more of these filings, so join us there. So this is a special filing and amendment to a registration statement, which basically means they're updating their paperwork with the SEC to offer more shares to the public, or in this case for someone else to sell their shares. It's a bit like a company saying, hey, we've got these shares available, but we aren't the ones selling them, someone else is, and we're just making sure the paperwork is up to date. The big news here is that Kipspace Select LP, who is the selling stockholder, is looking to sell a massive chunk of shares, over 34 million shares. To be exact, this is a lot of stock, and usually when a big investor dumps this many shares, it can put a lot of pressure on the stock price. Now, the company itself says it's a smaller reporting company, which means they have less than $250 million in stock held by people who don't work for the company, or less than $100 million in annual revenue. Whatever the case, it means they get to report a bit less information technically, which can sometimes make it harder for investors to get the full picture. And oh boy, do they list a ton of risks. You'll find over 100 pages dedicated to just the risks involved in this company's operations and investments. It's like a financial horror novel, but we'll focus on the most critical ones from their own summary. One of the most significant risks they highlight is the inability to manage growth effectively. This means that if they get more customers or more sales, then they can handle their whole operation could get messy, and they might not be able to deliver on promises to customers, which is a huge red flag for any business. And to make matters worse, they directly state they have a history of losing money, and if they can't make enough money as expenses go up, they might never become profitable. This is a classic sign companies burning through cash hoping for a big hit that might never come. Then there's the debt. A major concern is their inability to pay back loans and convertible notes. This is a serious red flag because if they can't pay their debts, all their future plans could be in jeopardy. Let's talk about the stock itself. They are very upfront about being a penny stock, which means their stock is traded at a very low price. And the rules around penny stocks are designed to protect investors because these stocks are often highly volatile and risky. Adding to the risk, they also mention that the trading of their stock is very limited, meaning it's hard for investors to buy or sell shares when they want to, which is a major hurdle for any investor looking for easy access to their money. Now, for a truly alarming disclosure, their auditor Olenka Eubler and Co. has been charged by the SEC with helping people break securities laws. This is a massive red flag for any company, and it's why GivBux had to switch auditors. As pointed out in the filing, they had to change auditors for the year ending December of 2024. You can find this company's stock on the pink sheets, which is a less regulated market compared to major stock exchanges. And this is often where you find more speculative or struggling companies. And for those hoping for immediate returns in terms of dividends, don't hold your breath. The company explicitly states they do not plan to pay dividends anytime soon, meaning investors are purely betting on future stock price appreciation. Now, let's look at the financials for the year ending December 2024. The company made about $544,000 in revenue, which sounds okay, but when you look at the expenses totaling over $32 million, you see a huge loss of over $3 million for the year. That's a massive gap between what they're making and what they're spending. For the quarter ending March 2025, their gross profit was just over $10,000 on $66,000 in revenue, a very low profit margin that doesn't inspire much confidence. The net loss for the year ending in 2024 was a staggering $3.3 million, while for 2023 it was around $1.1 million. That's a huge jump in losses in just 1 year. Looking at the balance sheets as of March 2025, they only had about $17,000 in cash and over $3.6 million in current liabilities, a dire cash situation. The company has a huge amount of convertible notes payable that's debt that can be turned into stock, and as of March 2025, this debt was over $3.6 million, with a substantial portion of that being due within a year. And when you add it all up, their total stockholders deficit as of March 2025 shows they have liabilities exceeding their assets by over $3.6 million. This isn't a good look at all. They also list common stock to be issued, which is essentially a liability representing shares they've promised to give out. The company is booking around $73,000 in amortization of debt discount for the first quarter of 2025, which is an accounting way of recognizing the cost of issuing debt at a discount. And then there are these derivative liabilities, which are essentially contracts whose value changes based on stock prices, and they've recorded over $631,000 of these as of March 2025, all of which are classified as level 3 fair value measurements, meaning they're based on highly unobservable inputs, which adds another layer of uncertainty. The financials also show significant dealings with related parties, including loans and accrued interest to entities controlled by individuals like Kenyatta Jones and Salvatore Lauria. Interestingly, the auditor's report for the year ending December 2024 is signed by Lao professionals based in Lagos, Nigeria. This is a recent change from their previous auditor Olayinka Oyibala and Co. And given the SEC charges against the prior auditor, it's understandable, but it also means the new auditors are likely still getting up to speed on the company's complex financial situation. The auditors themselves are raising the alarm about the company's ability to continue as a going concern due to continuous losses and uncertain capital, a strong warning sign for investors. Earlier in May 2025, the company secured financing through convertible notes and warrants for up to $11 million, which sounds good, but the devil is in the details, with original issue discounts and fees that significantly reduce the actual cash received. GivBux claims its competitive strength lies in a network marketing strategy that rewards users for referring others, which is a common model, but the ultimate success hinges on attracting and retaining users and merchants, a challenge they seem to be struggling with based on the financials. Their business model of a fintech mobile wallet super app is ambitious, but the numbers don't yet support this grand vision, with only 11,000 users and 258 merchants as of December 2024. It's a long way from revolutionizing purchases. Leadership is also a point of concern, with a founder who has a history of involvement in multiple companies, and as described here, a very deep understanding of the over-the-counter markets. So what's the verdict on GivBux Inc.? Well, the financial picture is pretty grim, with significant losses, huge debt, and a concerning lack of cash on hand. Their auditor's own report raises substantial doubt about their ability to keep operating, and the fact that their stock is considered a penny stock traded on the pink sheets only adds to the high risk profile. The company's ambition with its GivBux super app is clear, but the execution and financial health are currently not there. While they are trying to raise capital and grow their user base, the current numbers suggest a very difficult road ahead, and the past issues with their auditor don't exactly inspire confidence. The story here is one of high ambition but low current performance and significant risks for any investor jumping in right now. Alright, that's our breakdown of GivBux's latest filing. If you found this analysis valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. And don't forget to check out our Discord community in the description below, where we break down more of these critical documents. Thanks for watching. See you next time.